AI anxiety and debt concerns are continuing to impact broad stock markets, which is why they're being pressured lower. But we are seeing some precious metals hit new highs overnight. My name is Jessica Amir, a market strategist here with Moomoo. It's great to have your company on this 18th day of December. The broad US stock market, as tracked by the S&P 500, is continuing to peel back from its record. It's now down about 3%, while the pin-up index that we speak about a lot, the Nasdaq 100, is almost in a correction. It's down about 6%. In Asia, pressure continues there. Hong Kong's Hang Seng is down about 7% from its high. The Aussie market is down about 6%. What's really telling, though, is the biggest losers among stocks that saw the most selling overnight were some of this year's top performers. Tesla has fallen about 4.6% from its record all-time high. Nvidia continues to fall. It's down 3.8%. Broadcom's down 4.5%. Google down 3.2%. What's critically pressuring US markets right now is a couple key things. Firstly, there are concerns that some commercial banks in the US are being actually asked to accept late interest payments. Secondly, we did see Oracle come out overnight. They're basically looking to finance the build out of a brand new $10 billion data center at a time when we've already been speaking about Oracle likely to see negative cash flows next year. So this has thrown up some concerns about the broad AI trade. And the third reason that markets are continuing to fall was that oil prices pricked back up. They rose about 3%, bouncing off those 2021 lows and reversed yesterday's loss. Why? Well, Trump basically ordered a Venezuelan oil tanker blockade. The takeaway here, I guess, we know tech and AI stocks, they could have further room to fall because AI anxiety is rising, and the technical indicators for the key indices that we look at, the S&P 500 and the Nasdaq 100, are suggesting we could have further room to fall. But it's a no-brainer. It doesn't mean these sectors and these markets are down and out. The hottest growth sectors right through till 2030 will probably be in the tech and AI space, but the market right now is just adjusting and digesting what is happening. But there's always a bull market somewhere, as I always say, and that is in the metals market. We've been speaking a lot about this. One of those reasons for metals continuing to shine is not just because the AI build out is seeing metal demand push up, but US dollars, or the US dollar, is continuing to fall again. And that's exactly why platinum rallied to a 17-year high overnight. It was also boosted by the fact that there is greater trading in China for the precious metal. So let's talk about platinum today. Platinum is up 113% this year. It's actually doing better than other metals like copper, which is up 32%. Gold's up 65%. Hooray. But silver is doing better than all of these. And silver is still up about 130% this year. But the good news is, let's just focus back on platinum, why you could expect higher prices next year, and it could be worth some of your investing dollars. Let's cover why. So platinum is expected to move into a slight surplus next year, and this should support its price higher after it's been in a pretty large deficit over the last couple of years, and that's why its shares are bounding higher from depressed levels. So what is actually happening is a couple key things. A supply from South Africa and Russia that is only marginally growing. There's been underinvestment for many years and many mines are closing down. At the same time, we've got platinum demand rising from the key sectors, the automotive, industrials, and jewelry sectors. And this is why we are seeing the price of the metal rise. And of course, support of a higher price is higher investment demand. So we are probably likely to see higher investment demand for platinum. So that's something for you to consider. Let's just build out the case now for what is likely to push up physical demand for this critical metal. So consider that 30% of the world's platinum is actually used in the automotive industry to build out things like catalytic converters, basically to reduce emissions. But platinum is also needed to build fuel cells and electrolyzers in the hydrogen market as well. And look, as we all know, auto demand is not slowing down. Also consider 20% or thereabouts of the world's platinum is actually used in the industrial sector, which we speak about a lot. So this is used in fiber optics, LCD screens, hard drives, and then of course the medical field are using platinum for pacemakers. Platinum also is used in chemotherapy as well. And we all know AI and medical demand is on a one-way street. It's rising. But the other big demand driver for platinum is jewelry. This is seeing a sharp rise in demand from markets like China and Japan and America. It's basically known for being one of the strongest durable metals. I know a lot of couples are increasingly opting for platinum platinum wedding rings and engagement rings. Basically, the takeaway here is if you do believe that demand will continue to exceed supply and push up the price of platinum, you might be looking to maybe add some platinum investments to your portfolio, given its price is probably going to keep on pushing up, because we do know, as we're just saying, a demand from AI, automotive, medical is not slowing down. There are a couple ways to invest in this theme. Let's just unpack those. So, of course, there's many ways to just find out how you can find out about ETFs or stocks, who the biggest players are. But we just wanted to call out a couple of ETFs. There's the Global X Physical Platinum ETF. This basically tracks the price of platinum, and it goes by the ticker of ETPM. PT. So this one is listed on ASX and also in the US as well. But if you want broad exposure to precious metals, as we're saying, with the price of platinum, gold, silver, palladium, all higher, you can do that via many ETFs. One of those is the Global X Precious Metal ETF. That ticker is ETPMMP. Those are available again down under here in Australia and the US, but there's also other precious metal ETF baskets such as the GLTR. All of these ETFs, mind you, are up considerably this year and have outperformed all global stock markets this year. This ETF, GLTR, up 81%. Let's move to stocks to add to your watch list and mix it up and get stock specific now. Let's kick off with a palladium miner. One that's pretty small down under. It's called Southern Palladium. It goes by the ticker of SPD. So this should be on your radar. Its shares are up almost 200% this year. Yesterday it was a top performer, up 6%. Yeah, sure, it's a small miner. Small miner by size and scale. There are 200 million in market cap, and they are focused on potentially looking to build out in South Africa. They're expected to break ground at their flagship project there too. So maybe this is a stock for you to watch. Keep in mind, it is a small company and classed as speculative. Let's move to something that is not speculative. Medline. Medline, the biggest IPO this year, debuted on the New York Stock Exchange overnight, and their shares opened 21% above their offering price. So those who backed the firm, as in bought into the company before it listed on the stock market, they basically were piling into the company, believing that this medical supplier is probably going to do pretty well next year. And sophisticated investors, of course, as we've been speaking about, because we're going into what could potentially be a slower growth year, sophisticated investors generally rotate their portfolios to defensive sectors such as healthcare. So that's why we saw this company Medline start trading with a $47 billion valuation. That basically means those who bought in before the IPO doubled their money. So keep your eye on this one. Let's see if it continues to go up. Perhaps maybe over the next 6 months, keep your eye on that. MIcron is a star performer. It's been a star performer this year. And overnight, they delivered better than expected earnings results. A couple of things to really call out and pause on here. They are just one of 3 main providers of DRAM, so direct access memory, and HBM, high bandwidth memory chips. That's besides the majors, Samsung and SK Hynix. So that basically gives Micron pricing power, and that's why Micron is compelling and considerably growing their earnings far above expectations quarter on quarter on quarter. And this also it's really important to reflect on Micron's results. They are stellar, and it basically gives us a good gauge of AI demand from data centers, given Micron sits in the upstream. So that basically means they're key in supplying the critical parts to the big companies that we speak about a lot, like NVIDIA, who are actually making other chips. That's exactly why Micron is the best performer in the Nasdaq 100 this year. It's up 167%. It's overwhelmingly got a strong buy rating. Webbush earlier this week came out and said, hey, this stock should be on your radar. He's got an outperform rating. Average price target, though, about $300. I suspect that investors will be looking to buy into weakness here, getting ready for potentially more upside with Micron.